So, welcome guys. This is our MTP2 for the September 26 examination. We have already conducted RTP, MTP, and if any one of you wanted the playlist of the MTP, RTP, or the marathon, you can view my channel or WhatsApp channel, or you can directly message me also. Okay, so without delay, let's go to the MTP2, the MCQ part, right? Okay. So as usual, the first part is the 30 marks MCQ, which is the case scenario based initially. So this is full the case scenario. Let's directly go to the questions. Then we will read back. Okay. First question. Based on the facts given in the case, which of the following best distinguishes the engagement partner's decisions from managing audit manager's subsequent actions? So let's just go through the case scenario. If you see, they are talking about engagement partner, audit team, etc. So just we'll run through the case study. XYZ and Co Chartered Accountants have been appointed as the auditors of ESK Engineering Limited, listed entity engaged in manufacturing heavy industrial equipment. During the year, company acquired a foreign subsidiary, implemented new cloud ERP across the manufacturing unit, entered into long-term contracts involving multiple performance obligations. So they are saying about the company. At the planning stage of audit, planning, which is nothing but your SA 300. Okay. At the planning stage of audit, the engagement partner held discussion with the audit team and concluded that audit would require significant attention in areas of revenue recognition, consolidation, valuation of inventory, IT general control. Accordingly, he decided to deploy IT specialists, assigned experienced personnel to revenue recognition, consolidation, performed interim testing before year-end commencement of the work. So that's the planning stage. So he considered it is essential that some areas need attention. So he assigned adequate personnel. Based on these discussion, audit manager prepared a detailed program specifying the nature, timing, and extent of procedure for each significant account balance, allocation of work among the team members, audit procedures to be performed in response to the risk. So as you know, in SA 300, the initial phase is audit strategy, which determines the scope, direction, timing. Then based on that, you prepare the plan to conduct the audit in an effective manner. Based on that, you prepare the program. So the engagement partner is basically saying about the strategy, how it is to be done. And based on that, he's determining the program. Okay, anyway, we have read till here. So let's go to the case scenario. The engagement partner's decisions constitute plan because they determine the procedures performed, whereas manager's detailed program represents the strategy. See, here manager is doing nature, timing, and extent of procedures. So that is not strategy. So here they say manager is doing strategy. So option A is wrong. Now next, the engagement partner established the overall strategy in determining the scope, timing, direction of audit, whereas manager translated the strategy into plan by specifying nature, timing, and extent of audit procedure. This option seems to be correct, but please read the next two. Both engagement partner's decision and audit manager's program together constitute plan, as the strategy is prepared only after completion of risk assessment procedure. No. Actually, strategy should be initially prepared. Based on strategy, only plan will be prepared. So this also seems to be wrong. Audit manager's detailed program supersedes the overall strategy. No, it doesn't supersede, it doesn't replace. So the answer is B. So if you see, engagement partner establishes strategy, which is scope, timing, direction of audit, whereas manager is translating this into a plan, which is scope, timing, direction, which converts into the program. So answer is B. Okay, the next question. Considering the information obtained while understanding the entity and its environment, which of the following most appropriately explains why partner instructed the team to evaluate the information before designing the further audit procedures? Same, we read till here now. If you see further, while obtaining understanding of entity and its environment, team noted that revenue from maintenance contracts was recognized. Understanding of entity and its environment, which is Essay 315, identifying and assessing risk. Through ERP-based inputs provided by the project managers, the team observed that manual entries were relating to contract modifications were approved, required approval from the chief financial officer. Internal audit report highlighted deficiencies in the manual overrides ERP. Newly acquired subsidiary has not been fully integrated in the process with parent company's ERP. So there was issue. During the discussion with the team, CFO stated that manual approval were operating effectively and adequate provision has been made for obsolete. However, internal audit had informed that several contract modification has been approved after considerable delay. So internal audit says there's a huge delay. Further, warehouse manager stated that obsolete inventory identified during physical was still awaiting disposal because board approval has not been obtained. Inventory aging report also reflected significant increase in slow moving. So initially they assess risk. Now, once you start the audit, you find a lot of details. So risk assessment, you learn the sentence, right? Risk assessment is a continuous and dynamic process which has to be evaluated. Based on that only, you perform what procedure? Further audit procedures. Okay, which is further audit procedure FAP. So to evaluate information, then perform further audit procedure. So they ask you why the engagement partner instructed the team to evaluate the information before designing. To determine whether ERP eliminates the need for substantive testing. You cannot eliminate substantive testing. There is a sentence, SAP has to be performed irrespective of risk, but extent of SAP will increase or decrease based on risk. To determine whether management representation is sufficient evidence. You know what? As per SA 580, management representation is not a sufficient and appropriate evidence. To decide whether reliance can be placed exclusively on the work performed by internal audit function. As per SA 610, you cannot rely on internal audit function exclusively. It's only a partial substitution. So the answer should be D, but still, to identify the risk, by considering whether there is any contradictory information, evaluating the risk at the assertion and assessing likelihood, possibility of misstatement. So that is SA 315. So based on the risk, you have to again evaluate, then only you have to design the further audit procedures. So the answer is D. Okay, the next one. In the circumstances described in the facts, which of the following best justifies engagement partners' direction that oral representations or oral explanation should not be accepted without corroborative evidence? See, if you see the last para, the engagement partner instructed the team to evaluate all information obtained from different sources before designing the further procedure. He emphasized that inquiry alone not ordinarily provides sufficient and appropriate evidence. Accordingly, management's oral explanation should be corroborated with other evidence, whether appropriate, confirmed through written representation. See, based on nature, audit evidence is oral, visual, documentary. Oral evidence is least reliable. So here, best justifies regarding the management's oral representation. Since CFO is responsible for preparation of FS, the auditor may ordinarily rely on oral representation unless there is evidence of fraud. No, you cannot rely on oral representation alone. You have to corroborate with written representation and other evidence. Since contradictory information was obtained from internal audit department warehouse, the auditor should disregard management explanation altogether. See, you cannot disregard altogether. You have to corroborate more evidence. You need not disregard altogether. This word altogether, wrong. So what auditor will do? Although inquiry may provide important evidence, it does not provide you sufficient and appropriate. Therefore, auditor should evaluate inconsistent response, obtain sufficient corroborative evidence where appropriate, obtain written representation from management before drawing conclusion. That seems to be the correct. Written representation obtained are conclusive. Never. As per SA 580, written representation are not substitute nor conclusive. So the answer is C. So this particular case study deals with SA 300, then goes to SA 315, then goes to SA, 580, like that. So that's case study 1. Come on. Let's go to case study 2. PQR and Associate Chartered Accountants appointed as the Star Electronic Limited. Now that's a big case study. As usual, what we will do is we will go to the question and come back. Now we'll read. The auditor performed analytical procedure, identified significant increase in the trade receivables that was inconsistent with comparatively modest growth in credit sales. What should be auditor's responses? So without even reading the case study, we can say analytical procedures, which is SA 520. It states, whenever there is an inconsistency, auditor shall investigate, where auditor will inquire the management and obtain their response. Further, he has to perform audit procedures as appropriate. So that is SA 520 for you. So inquire the management regarding the unusual fluctuation, evaluate the explanation with other evidence, perform further procedure. Perform further procedure, inquire. Seems to be the correct option, but still, let's read. Accepts management explanation since increase is expected to reverse after year end and no further procedure. Then why audit done? You have to perform further procedure. Conclude that FS are materially misstated because analytical identified unexpected relationship. Yeah, analytical identified unexpected relationship, that's right, but you cannot conclude merely by that. You have to perform inquiry and further procedure. Restrict further procedure to obtain written representation from management. Again, same. Written representation cannot alone be sufficient. So answer is A. So something related to SA 520, analytical procedures. Next, please. Based on the facts of the case, which of the following observation most strongly indicates that auditors should perform additional procedure regarding valuation and recoverability of trade receivables? So just we'll go through the case study. During the planning stage, team identified trade receivables as a significant audit area due to rapid expansion, the company's dealer network. Accordingly, auditor performed analytical procedure by comparing the current year turnover with aging analysis, profit, etc. Analytical procedure revealed that credit sales increased by 12%, but trade receivables had increased by 48. See, there should be some proportional increase. If sales increase by 12%, so that trade receivables, sales increase by 12%, so receivables should also increase by same proportion, right? The proportion of receivables outstanding is more than 180 days and increased significantly compared. On question, the finance director explained that increase was temporary. However, the engagement team observed that long outstanding balance related to customers' credit limit repeatedly extended issue. The auditor therefore decided to obtain additional evidence by examining subsequent collection, reviewing correspondence, and adequacy of provision. So he identified some kind of risk through analytical procedure. While evaluating the controls over receivables, auditor noted that new dealers were approved through credit control department before sales were made. Sales invoices were generated automatically through ERP. Collections were handled by separate department. However, auditor observed that follow-up of overdue were inconsistent and there were several long pending cases. So full issue, guys. Okay. Now, based on this, which of the following observation by the auditor says more strongly indicates more procedure, meaning which is the most issue they are asking? New dealers were approved by control credit department before sales were made, indicating credit sales were operating appropriately. Here credit control were appropriate. So what need? Possibility of errors in recording sales transaction. Yes, seems to be correct. Significant overdue balance, repeated credit extensions, inconsistent follow-up, absence of legal actions indicate highlighted recovery of concerns. See, this is more vulnerable, more issue. See, B or C are more issue, C seems to be more appropriate. Customer collection were handled by department, independence of sale, providing degree of segregation. This is good actually. Then you know, once it is okay, risk is less. So procedure is less. Here they are asking why to perform additional. This is good. So most appropriate is C. Come on. Which of the following would be most relevant in determining nature, timing, and extent of audit documentation as per Essay 230? Wow, how cute. They themselves said Essay 230. They're asking about form, content, and extent of documentation. You know, content of documentation depends on professional judgment, number of team members involved, volume of accounting records maintained, extent to which management relies on working papers. The auditor's documentation form content depends always on auditor's professional judgment. It does not depend upon number of team members. More team members, more working papers. No, it depends upon size and complexity, but not on the team members. Volume of accounting records, the number of transaction. More proper is auditor's professional judgment. The extent to which management relies, no. So answer is A. Okay. So that's essay 230. Now, next one. Which of the following is most appropriate regarding Rajat Industries? Now we have to go in search of Rajat Industries. After the financial statements for the year ended 31st March has been prepared, but before auditor signs the report, one of the largest customers called Rajat Industries, owing approximately 18 crores, declared insolvent. The customer was facing severe financial difficulties even before year end, and a substantial proportion has been outstanding for more than 18 months. So when you read itself, you feel it's a subsequent events as per essay 560. Right. So what they want? The insolvency provides evidence of condition which is existing as on the reporting date. So if you see the case of Rajat, he is already existing as on balance sheet date, 18 months. It's already existing. So it should be adjusted. You know, AS4 says it's an adjusting events. It is existing only. So auditor should evaluate whether provision is required. Seems to be correct. The insolvency provides evidence of condition that arose after reporting date. No. It was already existing. It is a non-adjusting event because it occurred. No. It was already existing. Insolvency occurred after report signed, therefore automatically should modify if. No. It's already existing event, so answer is A. This is relating to essay 560 subsequent events. Even your AS4 also deals with this, events occurring after balance sheet date. Right? Next case study. Come on, life is a race. Run. Now you see banker. Let's read directly to the question, then read back. With reference to the cash credit facility sanctioned to the Sunrise Limited, which of the following constitute primary security? You know, securities are of two natures. It can be either primary security or it can be collateral security. Primary security is the main security, principal security over which loan is given. Collateral is additional. Can you go in search of Sunrise Industries? Here. During the branch bank audit, the audit team examined the credit facility of 40 crores sanctioned to Sunrise Industries Limited against hypothecation of raw material, finished good, trade receivables. As an additional comfort, bank also obtained equitable mortgage over factory land and building with personal guarantee. So, Ada, here primary security is the material finished goods. This is the primary security. Whereas equitable mortgage of land and building, personal guarantee is the collateral, which is the additional security. So they asked you which is the primary security. Of course, the answer is raw material, finished good, trade receivables. This one, which is hypothecated to the bank. Main security is the primary security. Next one. Considering the patterns of transaction in Sunrise Industries account, which of the following is the most appropriate? So whenever you see the option, there can be one or two answers which might be correct. So choose the most appropriate out of this, right? Okay. So here the answers here. Okay. Let's go to next. Again, Sunrise Industries. Continue. On reviewing the loan account, team observed that account has been remained irregular for almost 3 months. And this is cash credit facility. It will become out of order. However, 3 days before balance sheet date, the borrower deposited 8 crore, making the account appear regular. On verification of the transactions, immediately before the year end, auditors noticed almost the entire account has been withdrawn from fresh drawings transferred from another group company. Similar year end transaction has occurred in the previous year and also. You know, there is a point. The account regularized near balance sheet date should be handled with care. Regularized. near balance sheet date should be handled with the care. You know, if you find there is a risk, it should be treated as NPA. Here, see, there is fictitious transactions. Some suspicious. It's like a window dressing. The account should be treated as standard because they deposited. Auditors should examine the transaction immediately before and after the balance sheet to examine the regularization was merely an arrangement to prevent slipping into NPA. Seems to be correct. Auditor should disregard the subsequent withdrawal and transfer because such relate to next year. You should not disregard whenever there is a regularization near balance sheet date. See, it was 3 months irregular and just 3 days before, right? So like March 28th or 29th, they are doing. Accounts need not be examined further for NPA. You have to examine. So the answer is B. Done. Next, which of the following should the auditors verify while auditing Shiksha Jyoti Educational Society? Where is Shiksha Jyoti? Here. During the audit of Shiksha Jyoti Education Society, auditors observed that income tax has been deducted at source, interest earned on government deposit, fixed deposit. Although society was eligible for exemption under income tax, no refund has been filed. The auditors also noticed that separate statement of account and not prepared for hostel fund, game fund. All these transactions merged in general accounts. So there were some issues. Okay, so here two things. What all auditor should verify they have asked. So what's the answer? The auditor should, whether the society is eligible for income tax exemption. Accordingly, no verification is required for TDS. See, in chapter number 9, different entities, they say, in case of charitable trust societies, TDS deducted. If it is exempt, it should be claimed as refund. That should be checked. You have to check. So answer is wrong. Whether separate statements have been prepared only for hostel fund, staff fund. Only? No. Whether tax deducted at source has been refunded and whether same is correctly credited to general fund. So, whether income tax refund deducted from investment income has been claimed, recovered, whether separate funds has been prepared for hostel. See, there were two issues now. One, TDS. Next, funding. Both should be checked. So the best appropriate answer is D. Both has to be checked. Next. With reference to the conduct of executive director towards auditor, which of the following ethical threats are involved? You know, there are 5 threats: self-interest threat, self-review threat, advocacy, familiarity, intimidation threat. Where is the director? Here. When audit team insist on extending procedure, the executive director stated that if auditor continuing questioning the asset classification insisted on additional audit work, bank should recommend another audit firm in the next year. Substantially reduce future professional fees considering initiating legal proceedings for delaying audit report. They are threatening, they are deterring you. ED. So which threat? That's right. Intimidation. Self-interest is when financials da. Advocacy is when you promote. Familiarity is when close relationship. So here, intimidation when they are deterring you. Clear? So that's D. 12th. After evaluating the matters arising during both audits, the engagement partner instructed the team to obtain sufficient and appropriate evidence before expressing an opinion. Which of the following describes further audit procedure to be performed? Further audit procedure is basically SA 330 and it's also there in 500. Auditor should perform substantive analytical procedure alone to obtain evidence. See, substantial analytical procedure alone may not be sufficient. It has to be combined with the test of details. Auditor should perform test of controls alone. They say test of controls alone may not provide you with sufficient and appropriate evidence. Auditor should perform test of controls where required or when reliance on control is intended together with substantive procedure, TOD and analytical. So further audit procedure is equal to test of control and SAP. SAP is equal to test of details and substantive analytical procedure. So the best option seems to be D, not D, CCC. So first you will perform test of control, then you will perform SAP. SAP you will do test of details and you will do substantive analytical procedures. Auditor should perform inquiry of management and obtain written representation from management. Written representation alone or inquiry alone may not be sufficient. So the best answer is C. Right? Okay. So I think that concludes our case study. Now 3 individual questions. An audit firm is engaged to do the audit of a company for the financial year 25-26. The financial statements were prepared by management, reflect a profit before tax 1 crore. The audit program is nearing completion, so still audit is going on. Y instructs the staff to prepare the draft audit report with proposed date 4th July. Meanwhile, certain audit evidence and events comes to the notice. A response to pending external confirmation is received on 5th July. So external confirmation is received only on 5th. On 3rd July, local vernacular newspaper Y becomes aware that company is a major customer owing 50 lakh fled the country. So that's another event. Written representation are received only on 10th July. So this is 5th July, this is 3rd July, this is 10th July, and audit is only nearing completion now. We have not finished the audit yet. Watch this. You saw? Nearing completion. The engagement partner needs to determine sufficient and appropriate date to sign the report. Do you remember essay 580? What? Written representation. They say written representation should be near to the audit report date. Okay, here written representation you got on 10th July. So only after written representation it's better to give the audit report. So audit report should be given after representation, or in other words, written representation should be near the audit report but not after that. So audit report should be only after written representation. So if you're giving on 3rd July, 5th July, 4th July, your representation is after that. So your audit report should be dated only on 10th of July. Why? Because of written representation. So always it is better to date your audit report on or after the date of written representation. Here your written representation is only on 10th of July. So the answer is, yeah, correct. The answer is A. Yeah, A is the answer. Okay, second last question, guys. Only 2 more questions. Let's proceed. While auditing the valuation of finished goods, auditor examines the basis used by management for determining cost. The accountant provides costing sheet prepared for sample carpets were originally developed by obtaining customer orders. These costing details include hire, design, development, trial overheads, and the same has been used for valuation. Finished goods. Auditor evaluates whether such costing is appropriate for inventory valuation as per the applicable principles. See, this is something which is relating to valuation of inventory. You learn, right, in your accounts, cost should include those that brings the inventory to the present condition and location. Here, they are including costs such as higher design, development, trial overheads. Every cost is included, more than what it should be. So, as a result, inventory is overvalued or undervalued. Inventory is overvalued. So, inventory should include only those costs which is bringing the inventory to the present condition and location. Okay. So, as a result, it is overvalued. Yeah. Yeah. So, yes. So, see, costing provided by accountant is likely to be accepted by auditor. No, we have to check. Accountant is understated. No, it's not understated. Why? It is more included. So it is tend to be overstated. It's not appropriate. As I told you the reason. Now going to the last question. Over. MTP 2 MCQs over. The practitioner is engaged to perform two different types of assurance engagement. One high level of assurance, another moderate level. While planning the work, practitioner evaluates nature, timing, and extent of procedure, as well as the evidence required to form the conclusion to be expressed. The audit team discusses the difference between reasonable assurance and limited assurance engagement. Which of the following is not true regarding distinction between reasonable and limited? So, this is regarding chapter number 1, which is nature, objective, and scope of audit. Okay. So they wanted which is not true. A reasonable assurance involved more extensive and detailed procedure. Correct? So they wanted which is not true. Reasonable assurance engagement involves obtaining sufficient and appropriate where limited only involve limited evidence. See guys, both assurance you have to obtain sufficient and appropriate evidence. This seems to be false. So, this seems to be the correct answer, but wait. Reasonable assurance engagement provides higher level than limited. That's correct. They wanted which is not true. They wanted which is not true. Reasonable assurance engagement involved drawing conclusion reasonable, whereas limited assurance involved limited conclusions. Yes, this is also true. So answer is B. So with that, we are coming to the end of MTP 2 MCQ discussion. We have done RTP, MTP and all. So keep going, buddies. All the best.